definitely outsource sales tax because it is, as Michelle will show you, something you don't want to manage internally on your own.
Right.
Definitely
Yeah. I'm about to talk about how complex it actually is. Great job, Ben.
Awesome. Thanks, everybody.
Thank you, Ben. Are you ready, Michelle?
Yeah, I am actually ready. Thank you for having me today. It's
Yes,
wonderful to be here.
excited.
I'm going to go ahead and share my screen.
Perfect.
Are you ready to get started, Amy? Or do you feel
Yeah,
like you
it's
need to take
1:30.
any
So
time? Okay.
technically we should be kicking it off. Again, if anybody has questions, so far everybody's been putting them in the chat, so that's been great. Michelle, do you want me to just bring them up to your attention when they come in, or do you want to wait till the end?
Please bring them up
Okay,
as they come up. That's usually easier for me. That way I can address it if there is a major question. Yeah,
perfect. All
absolutely.
right, so I will let you take it away.
All right, great. And you can see my screen, okay, right?
Yes, looks great. You are good to go.
Wonderful. So welcome everybody. Thank you so much for joining me today. I am excited to be here. My name is Michelle Talada and I am from Avalara. A lot of information up on the screen, but really just a couple things to point out. I am a sales executive, a senior sales executive at Avalara, and I'm on the Microsoft team. So that means I focus on working with not only Microsoft partners, but their clients who are utilizing Microsoft technology and helping them to evaluate Avalara and how that might plug and play with Microsoft platforms like Business Central. So I've been with Avalara about 2 years. I've been in the world of compliance a little over 10 years, and then I was a high school English teacher before that. So this is kind of my sweet spot, educating, making sure that people feel comfortable with what they have to deal with, and presenting them with tools and technology to help them get to their goals. So again, excited to be here. I am from Pennsylvania, and I do have a dog that is over on the side. His name's Barkley. Hopefully he won't disturb us, but in case he does, you'll know who it is. So today we're really going to be talking about tax compliance. I did want to give you a little high level about Avalara itself first, just so you have an idea of who we are and what we do. Avalara has been around for about 20 years. We just celebrated our 20th birthday. There are some competitors who've been around longer, but one key thing about Avalara that I do want to mention is we were built in the cloud. So our tax engine was built in the cloud. We're not having to band-aid it or migrate old technology. We really originated in the cloud, and we've been refining that for 20 years. So that same tax engine. We are a global organization, so we're headquartered in the US, but we have offices around the world, and we do help businesses in more than 95 countries. So we've got over 30,000 clients, more than all our competitors, and we're really helping them with an end-to-end solution. So not only that tax determination and calculation, but certificate management, returns filing, and we do that all through really focusing on those integrations. So we have over 1,200 pre-built integrations. We actually started with Microsoft in the ERP channel, and our first connection that we ever built was with GP, and we've only continued to expand that partnership with Microsoft since. So we've got several connectors, everything from GP, BC, all the way up to field service, project operations, you name it. We've got a connection to it. So really strong in the Microsoft ecosystem. So I'm going to go ahead and stop for our first poll question. Amy, if you want to bring that up. So first question is, how familiar are you with automated tax compliance solutions? Very familiar, somewhat familiar, or not familiar at all?
Looks like the consensus is somewhat familiar.
All right.
Oh, and not familiar.
Okay. Great. So I am here today to talk a little bit about why sales tax compliance is so challenging, what automation means, and how we go about doing it specifically through the technology that we provide here at Avalara. So the majority of our chat today will really be about understanding sales tax itself a little bit and what automation can actually look like. So I want to start with that, just current state of managing sales tax. When most people think about sales tax compliance, they focus on calculating the tax, specifically on the correct rate. but rates are really just the tip of the iceberg. So I do want to kind of take a minute to explore several pieces of sales tax challenges that might impact your business. There are a lot of things besides just determining that rate. Sometimes it takes a lot before you can even get to that part. So managing sales tax really is complex and super time consuming. There are over 165 million mailing addresses in the US alone. So when you're thinking just about US sales tax compliance, not even thinking outside of the US, but just in the US, you've got so many mailing addresses, over 13,000 sales and use tax jurisdictions. You've got tons and tons and tons of different rates, special rates, use tax rates. You've got lots of different types of exemptions that can apply to a particular item or sale. And then you also have lots of different types of certificates that can go with that. So there's a lot to manage when you're thinking just about the numbers alone. There are 5 main steps to managing sales tax compliance. So if I can boil it down to 5 main things, you first need to understand where your business has to collect and remit sales tax, because you don't necessarily have to collect everywhere. The second is to get registered. So wherever you have an obligation to collect, first you have to register. You never want to collect sales tax without being registered, because you have no way to give it back, right? And that's tax fraud, and we want to avoid that at all costs. Once you're registered in those jurisdictions, you have to determine if sales tax should be applied. So, and then figure out based on the taxability of that product or service, and then at the correct rate based on the rules in that jurisdiction. Then you also have to track any kind of exemption certificates or exempt sales that you have, because those also have to be reported out. And then you have to report all of that out and remit those funds back to those jurisdictions. So those are your 5 main steps: understand, register, collect, or calculate, track those exempt sales, and then remit. So I've got another poll question for you. If you'll bring that up for me, Amy. What is the biggest challenge your business faces in tax compliance? Is it staying updated with changing tax laws, managing tax compliance manually, ensuring accuracy of those calculations, understanding and managing Nexus, or maybe it's something else?
So far, it's staying updated with changing tax laws. Oh, and we got some ensuring accuracy in tax calculations.
All right. So, you're not alone. You answered the way a lot of people answer. The business landscape is changing all of the time, right? And it's changed drastically in the last, 5 to 8 years, especially with the pandemic. Online sales, remote employees, we've changed the way we store our inventory. A lot of drop shipping that might be happening. All of those things can impact your tax obligations. And each state and even some local jurisdictions have their own rules about what is taxable and what is not taxable. So I know it's a couple years ago, but 2022 alone, there were over 100,000 tax rate and taxability updates in the US and Canada. That's crazy. How do you maintain that? How do you manage all of that? So it gets really complicated really fast. So we actually did a survey in 2023 asking pretty much the same question, and the results were very similar to what you all had popped up. And let's see if I can get it to go. There we go.
I don't see your slides.
Oh, did I stop sharing for a second?
I think so, or I don't know what happened.
Let me see. I lost your screen. You're not seeing my screen at all, are you?
I see you.
And I don't see you.
Okay, well, that's interesting.
Weird. Okay, hang on one second. All right, I'm going to go ahead and share one more time. I think I might have just, I don't know what happened there, but you should just see a nice fall scene.
I do. And there
And
we
that'd be-
go. There's the
There we
slide.
go. Okay, good. All right. Sorry about that. So anyway, we did a poll in 2023 and we asked the same question, and keeping up with changing tax laws did come out to be the top answer. But understanding Nexus was right behind that at 50%. So I'm going to dig in a little bit on the Nexus piece first, because in my 5 steps, that's really the first one. So I want to go ahead and just kind of focus on that for a little bit, because part of the changing tax laws is understanding the changing rules around Nexus. So what is Nexus? Essentially, Nexus is the term that we use when you have, it basically defines the connection between a taxing jurisdiction, so in most cases that's a state, and your entity. So anytime you have breached Nexus or established Nexus, that means that you have an obligation to register and start collecting and remitting and reporting. So Nexus itself can be very challenging because each state has different rules for what establishes Nexus. And those rules traditionally in the past have been around physical presence. So people, places, things, right? So you own property or lease property in that particular state or jurisdiction. You have people located there. So physical employees who are living and working there. Maybe you have field service, sales, or staff that are going out into the field, into that jurisdiction to actually work or represent the organization. Things, you might store inventory in that particular state. You might also have affiliates that are representing your organization. But that physical presence can even go to things like attending a conference. So if you're attending Summit, right, as many of us do, and we spend a week there, depending on the state, that could potentially trip Nexus. If you have a physical presence attending a conference or a trade show of some nature, that could definitely trip Nexus depending on the rules of the state. And again, not all states have the same rules. So that's where it's tricky. It'd be nice if they all had the same rules about what trip Nexus, but they don't. So you have to really know the rules of every single state. On top of these things, you also need to be aware of economic nexus. Economic nexus. On June 21st, 2018, the U.S. Supreme Court issued a decision on a landmark case, South Dakota versus Wayfair. Essentially, Wayfair, the organization, I'm sure you've heard of them online, they sell. They had no physical presence in the state of South Dakota. However, they were selling into that state, right? So there was significant revenue in the state, and South Dakota basically wanted their cut of that. They wanted their sales tax. And so they were able to make the case to the Supreme Court that the amount of revenue in that, generated in their state constituted Nexus, and they won. About 40% of a state's revenue comes from sales tax in many cases. So with online sales and the way that the market has been changing, states really needed to get their arms around all of that missing tax money. And so this particular case helped them to do that. And the whole idea of physical presence as the standard just, was blown away. So that physical presence piece remains. In addition to the physical presence, if you have no physical presence in a state, you still might trip Nexus through the amount of transactions that you have in a state. So about 88% of businesses said that Wayfair decision did impact how their company conducts business. And again, out-of-state sellers who have no physical presence in the state could still trip Nexus based on their revenue or transaction volumes in the state. Most states enacted a law soon after the 2018 Wayfair decision. There were a couple holdouts, but as of now, all 45 states, including Washington, D.C. and Puerto Rico, and some local jurisdictions in Alaska. Alaska has no state sales tax, but they do have local sales tax. All of them have adopted the economic nexus rule or threshold. Each state gets to determine what their threshold is, what's included in that threshold, and then what the measurement period for that threshold is. So to make it even more complicated, every state's making their own rules. They're not all the same. So you have to know the rules of every single state and what would trigger nexus in their state, both on the physical presence side as well as on the economic presence side. So this just is a quick map for you. It gives you an idea of what those thresholds look like. And again, it's really challenging to keep up with because those rules have changed over the years, right? So when the Wayfair decision happened, many of the states enacted thresholds that included a transaction volume. Several of those states have done away with that as recently as this past year. So the nexus thresholds, the periods, what's included, what's not included, that's always in flux, and you really need to stay on top of that. So even if you did a nexus study a few years ago, doesn't mean that the rules are the same as it was a few years ago. Most states are going to have about $100,000 threshold. Some states are a little higher, like California, Texas, New York. But again, you really do need to pay attention on what that threshold is, what the measurement period for it is, and what's included in that threshold. Once you determine the nexus that you have and you get registered in those states, then we move on to the calculation piece, right? Like determining, is the product or service that you're selling actually taxable? And if so, what's the right rate? So let's think about product taxability. It's not as easy as you would think. Just like Nexus, the states get to make their own rules about what is taxable and what is not taxable. So jurisdictions define that product taxability. And it can change. There can also be special exemptions for certain things. There can be special rates. So it's not just taxable or not. In some cases, it might be like taxable at a reduced rate. So for example, software as a service, which is what Avalara does, it is exempt in a lot of states, but it's taxable in a handful of states like Washington, and then it's taxable at a reduced rate in Texas. And it's just really not that cut and dry. I love the examples that are on this slide because they're 1/3 to the point of being funny. But I always like the one on the bottom right-hand side, the candy bars. So, you know, Snickers are taxable, but Kit Kat and Twix are exempt in Indiana. Why is that? Does anyone know out there? Amy, let me know if anybody puts it in the chat.
I mean, I know, but I just, because we've seen this before. But yeah, why do people think that? I think it's all candy, but apparently good lobbyists.
Right? So the reason why Kit Kat and Twix are exempt is because they have flour in them, and then therefore they are food, not candy. They are categorized in that way, and that's why they
So
are
that should
exempt
make us
from
all
candy.
feel better about eating it because it's food,
Yeah.
not candy. That's what you're telling us.
The bagels in New York that one is an odd one as well, but if they're sliced, they're taxable, and if they're whole, they're exempt. And the reason why is because sliced bagels are considered a prepared food and are thus taxable versus the whole are not. So again, there are some really absurd ones. One that's not on there that I always find funny is cotton balls. Cotton balls are often exempt. They're considered a medical device, but cotton rounds, if you use those to remove your makeup, they're considered cosmetic. Same materials, just one's a ball, one's a round, but it changes the taxability of that. So you really do have to be up on what these tax rules are, depending on the state that you're selling in. So once you kind of figure out the taxability of your products and services, you really kind of have to understand which jurisdictions are going to apply, right? And this is really a challenge. Over 13,000 taxing jurisdictions in the US alone. The full mailing address is really what you need in order to pinpoint the correct jurisdiction, because the reality is that a lot, like a zip code, is just not going to work. There are multiple taxing jurisdictions within one zip code. Sometimes those can overlap in some cases. So when you're looking at this actual map that I have here, this will give you a little picture. Zip codes are really great for mail. not really great for sales tax, right? It can be super inaccurate if you are basing your tax calculation on a zip or even a zip plus 4, because as you can see here, this is just a snapshot of California, which is wonderfully complicated. Look at all of the different taxing jurisdictions or special rates that are in there. And again, they are not, sometimes, all of that can be happening in one zip code, just different parts of it. So you really kind of have to be very, very accurate as far as the mailing address is concerned, rooftop accurate. A lot of people will say, hey, this doesn't apply to me because my sales are exempt. And I don't have to worry about sales tax because all my sales are exempt. I sell to resellers. I don't need to worry about charging sales tax. The reality is exempt sales are often included in those Nexus thresholds. So you do have to think about it because one, you could have triggered Nexus even with 100% exempt sales, which does require you to go ahead and register and then report out in that state, even if it's a $0 return. But it's also kind of something that you want to be aware of, just the amount of risk that you might be taking on. Again, most states are going to include exempt sales in their thresholds or some form of exempt sales. So the ones that you see in orange do include some form of exempt sales in their Nexus thresholds. Some include all exempt sales, regardless of the type, some only certain types of exempt sales. But again, if you've reached that Nexus threshold, and you are required to register in that state, you want to be very careful about making sure that you are collecting those exemption certificates, because that's really where all of your liability is going to sit. So if they were to audit you, they are going to be looking to see if you have exemption certificates in that state to make sure that you're proving why you didn't collect sales tax. So again, that's the big issue there, is that's tied up in those exemption certificates. It's now your job to prove why you didn't charge sales tax. And the state can hold you accountable for sales tax if you don't have the proper documentation, or if you did have a handful of sales that, were actually taxable because maybe you didn't quite know the taxability of your products and services because it might have changed. So the next challenge that you really have is those exemption certificates. Exempt sales are not that easy. You do have to collect those exemption certificates, and there's a number of reasons why it's challenging. Number one, employees often find it difficult to collect them. It can really add a lot of friction to the sales process. It's important, but maybe it doesn't feel urgent or much of a priority when you're trying to make a sale. A lot of times businesses just don't have the proper tools or processes in place in order to ensure that that certificate is actually collected. Remember, a certificate needs to be collected at the time of the sale. Otherwise, the sale should be taxed, and you should be doing then a credit rebill once that certificate. That's the legal way to do it. But again, a lot of people just don't have that process in place, so they end up marking someone exempt, moving on and intending to get it later, and then they don't, which leaves them open to risk. Also, a lot of employees are just not really trained to validate those documents properly. So they might get something, but they might not get the right document. It might not be filled out correctly. And then therefore, again, that leaves them open to risk because that documentation is not accurate. In addition to that, a lot of exemption certificates expire. So businesses, I often speak to businesses who are under the impression that they've gotten something in good faith, they have something on file, and they're not going back and looking at those documents. So maybe it was good, maybe it wasn't when they first got it, but now it's been a few years, and has it expired? Again, in a lot of states, those exemption certificates expire. For example, Florida, reseller certificates expire every single year. You need to get a new one every single year from your clients. Others are maybe 3 years. Some are lifetime exemption certificates, but that's not always the case. And again, those rules are going to change from state to state. So you need to be on top of the rules for all of the states for all of the types of exemptions that you might be getting. That retrieval is time consuming and hard. So think about it. Sometimes it takes multiple, phone calls or emails to a client in order to get it. Storing it, you might be storing it on a computer. Maybe it's a hard copy, it's in a file folder somewhere. you really want to think about how are you accessing those documents in the case of an audit. Audits can go back 3, 4, 5, 7, 10 years. Really, a state can go back as far as they want in most cases. So do you have a good storage method for those documents should you be audited and it goes back multiple years? Are you able to get those? How difficult is that going to be? The reality is that a single missing certificate can really cost a lot more than the taxes that you failed to collect on that particular sale. And I'll tell you why. Typically, an auditor is going to go in and say they're auditing you for a 3-year period. They are not going to look at every certificate in that 3-year period. Rather, they will ask you for a handful of certificates for a handful of transactions. They'll then look at those and they will calculate your error rate and say you're 80% accurate, 20% error rate. They're going to then apply that 20% error rate to the entire 3-year period of that audit. So again, a few missing certificates in that small window can then be applied to the entire audit period. So it can cost you a lot more than you would think. You do have the ability sometimes to go back and try to get an exemption certificate or get your client to sign an affidavit that they self-assessed if you did not assess. But that can be very challenging, is not the best client experience. And sometimes you just really don't have the ability to go back and get those, especially if they only give you a couple weeks to do it. A couple other things that are challenging when it comes to sales tax, state and local prep and filing, and you have to manage the calendar. Not all of them are monthly, some are quarterly, some are annual. You have to respond to the tax notices. In many cases, you're pulling lots of information from different sources, your ERP, your POS, your e-commerce site. You have to kind of aggregate all of that data so that you can prep and then file, and then going online and filing, remitting individually, that can be challenging. If you're doing it in a handful of states, maybe it's not too consuming, but as you grow and develop over time, 6, 7, 10, 20, 35 states, it can be very time consuming. You really need to respond to those notices so that you can avoid penalties, avoid future audits. So that piece, again, depending on how many states you are, can be a challenge. And then, of course, I've kind of already alluded to this as we talked about it, but really being audit ready, that's where Avalara really is focused, is trying to make sure that our clients are audit ready so that they have flexible reporting tools. They, can pull the information easily because, again, that audit can be painful. Why make it more so? So let's talk about the 5 W's of sales tax automation. I think I've kind of hammered home why it's so complex. And if you deal with sales tax on the regular, then you already know it's complex. So how do you go about automating? What do you need to know? So I'll start with the what of sales tax automation. Sales tax automation really is an end-to-end process to create accuracy and efficiency. So when we talk about Avalara and sales tax automation, we are talking about cloud-based software that can help you with all aspects of those 5 steps, especially the tax determination and calculation, the exemption certificate management, and even that return filing, so that it can automatically track and update those laws. You do not have to be the expert on those things any longer, and you can really automate that process. So who needs tax automation? Really, the answer is anyone can benefit from sales tax automation. It will help save time. It will help save resources. It will make you more compliant. Again, I hear a lot of businesses say, I don't really need to do with that because I don't have a sales tax obligation because I sell exempt. But again, not having a liability does not give you a get out of filing free card. So even if you have exempt sales, you still may have triggered Nexus and still may have an obligation to register and then file. And of course, managing those certificates is still your obligation. So there are tools that we can help you put in place to help manage those pieces of the process, even if the sales tax calculation piece is not a big concern to you. Every business, though, does have to decide on what the return on investment is going to be. Obviously, a smaller business that's only in maybe 1 or 2 states is not going to have the return on investment that a larger business would, or a business that is more exposed due to, doing business in multiple states. So multiple locations, multiple states, varied taxability, that's going to create more of an ROI than you're selling one single thing in one state. The risk there, the automation is going to be minimal. So why automate sales tax? Pretty obvious, everything I've already talked about, but you really want to reduce the time that is spent on, all of this work, determining sales tax rates and Nexus and handling all of these complex processes and saving you that money over time, but really also reducing the risk. So I can throw a lot of things at you, but for a lot of people, it's going to be to save time and reduce risk so that they can sleep at night. No one wants to mess with messing up the taxes. There are a few benefits. Again, I could throw some numbers at you, but that increased confidence, improved compliance reporting, minimizing the resources that are being spent on this, really taking those people who are valuable people within your organization. When they're working on sales tax compliance, they're essentially doing tactical tasks to try to keep you out of trouble as an organization, when they could be doing things that are much more beneficial to the organization's growth and hitting the overall goals. So it's really shifting that. Tax automation shifts those tactical pieces for compliance off to the automation, while your most important people, likely you, are spent doing things that are going to grow the business and again, hit those goals and focus on those priorities that you have. So how do you really choose the right tax automation solution? There are a lot of tax solutions out there. There are some that are good and there are some that are great. If you're thinking about a good solution, at a minimum, you want to have accurate tax calculation. You do want to have a certificate management program that's available to you. And you want to make sure that if they're filing your returns for you, that it is done on time and correctly. And then, of course, you always want to look for dynamic reporting capabilities. But a great solution will have all of that, and it will have more. One main thing to focus on if you're really looking for a great long-term partner and solution is a solution that really prioritizes innovation and that product delivery. And I say that because, as I've already tried to illustrate, the world of sales tax compliance changes all the time, changes rapidly. And so having a tool that can change with you, that can grow, that can make sure that it's always on the cutting edge of having tools at your fingertips to manage those processes is going to be really important. Especially when you're using Microsoft. Microsoft does a lot of updates, and you do want to make sure that the partner that you choose is really prioritizing that connector and those updates so that they can stay ahead of the game and that connector is not lagging behind. You do also want the ability to grow. So a great solution is not only going to have the basics, but it's going to have room for you to grow as an organization. Most organizations I talk to, their goal is to grow, to improve their processes, to continue to grow the bottom line, to expand their business. And so you always want to think about a solution and a partner that's going to allow you to do that without having to change to another solution. So Avalara's solution, as I'll talk about in a minute, it's the same solution. You can grow. It's the same solution for small businesses as large businesses, and it has the ability to grow with you, adding additional add-ons and solutions as needed. And then again, you really want to make sure that it's going to be integrated with all of the different pieces of technology that you have in your tech stack as you grow and change as an organization. So if you're using Business Central now, or maybe you're using something else and you're planning to move to Business Central, and possibly add on an e-commerce site, or maybe down the road a POS system. Maybe you want to have, a CRM so that you can do all of your quoting and your client management through it. If you need sales tax to be part of that, you want to make sure that those connections are going to be there for the tech stack you have now and the tech stack you'll have down the road. Again, you don't want to have to change that tax engine as you change as an organization. So to talk a little bit about Avalara now, how do we hit some of those components, right? Obviously, I wouldn't bring up a good solution versus a great solution if I didn't think that we had all of the components of a great solution, and we do. So our solution really starts with these three simple circles. In the middle is the most important one, that's you. And then of course, you're flanked by both your vendors and your customers, because as an organization, you exist to do both purchases and sales, right? So before you can start transacting as an organization, you do have to become compliant. And we already kind of talked about this a little bit, but first things first, you have to start, you have to get registered and licensed. So Avalara can certainly help with that. We help with licenses and tax registrations. If for any reason you kind of jumped the gun and you started transacting before you got registered in states, or if maybe there are states based on what I just said earlier that you should have been registered in that you didn't get registered in, we can help you with that too. So we do have services that can assess your compliance risk, can negotiate with jurisdictions under a voluntary disclosure agreement, and can get you properly licensed and back on the straight and narrow in that particular jurisdiction. You'll also notice to the right, this is kind of an interesting one that Avalara does and does kind of add to our breadth of services. But as a business, you're probably, doing business either from a facility that you own or rent. So if you own that property, you know that that's real property. And of course, we pay taxes on real property. And we do have a solution that can support the collection of those bills, the appeals of those bills if you think they're too high, and ultimately the payment of them. So if you do own your property, we have a solution that can help manage that. There are a lot of clients who don't own their property though, but there are 37 states who will still impose taxes on things that are inside the building. So in order to operate compliantly, you're having to pay taxes on things like desks, chairs, computers. Our software can help with that as well. So you can see here that this is starting to map out to Avalara's product solution set. And the focus of these core components here are really to get you up and running in some way, shape, or form before you start transacting. All right, so when we get to the transacting part, the first thing you want to think about is, I'm going to think about the context of selling. I know you're probably going to buy things before you sell, but in real life, in real life, you're buying, then selling. I'm going to start with the selling side. It's more fun, I guess. Probably more what we're known for, but in the upper left-hand corner, that's really where we're thinking about calculating sales tax. That's our Avatax tax engine that I'm sure you've heard about before. To the right of that, that's where you are collecting those exemption certificates. Then you do have to get them back to the government through the reporting aspect. And then you might even have some kind of e-invoicing or live reporting if you are selling globally. So if you're looking at our solution set, you're really thinking about Avatax, our exemption certificate management, our returns, and then our e-invoicing and live reporting. Underneath that, those core pieces are really supported by some additional functionality. So we do have the ability to support our clients with researching the taxability of the products that they sell. If you're cross-border, signing things like HS codes, and then even handling duty and tariff calculations for you as well. And then we can also support collecting any kind of tax forms that you might have, so 1099s and W-9s. So you'll see in orange, that's that core solution set that I mentioned. Underneath it in blue are going to be those supporting products on the sales side. But sales and use tax, right? That's what we always say. So on the left-hand side of the screen, it kind of shifts over to your procurement side of the business, right? Your purchasing side. So in this, it looks almost exactly the same. And that's because Avalara's tools can really help support both the sales and the use tax side, both the sales and the purchasing. So instead of you charging your clients and having to determine the tax on those particular sales, you are being charged by your vendors and you're having to determine the tax on those purchases, whether or not it's correct and whether or not you need to accrue it. Our tax engine, Avatax, it is the same tax engine, can also handle the use tax side, can handle those accruals. Likewise, instead of collecting an exemption certificate, you might be sending your exemption certificate to your vendors. We can help you to manage that. And then on the filing side, again, if you're accruing any tax, you do need to put it on the sales and use tax return. So it's the same return It's the same motion on the use tax side, on that purchasing side. And then again, if you are selling globally, that live reporting, e-invoicing, you might actually be receiving those as well. Those pieces are still supported by the same things. So product classification, we can help you with the research to make sure you're being charged accurately on any purchases. We can also help you to understand the classification of any goods that might be shipping. And again, we can help with those W-9s and 1099s. So all of that is really going to come over to just this one slide that gives you a really high level overview of what Avalara does. When we think about sales tax automation, really that orange piece at the top, those are those core offerings, right? So that's the tools, that's the technology that you're thinking about in order to make sure that you are able to do that sales tax determination, manage those exemption certificates, the calculation, the remittance, and even again, globally live reporting and e-invoicing if necessary. Underneath are those supporting products. And I highlight the supporting products. It's really important. These are very huge differentiators for Avalara. A lot of competitors are going to have components of that, the ones in orange. It's the blue pieces really that give you a full end-to-end solution. Again, remember, you want to choose a partner that's going to be able to help you with all aspects of it, wherever you are now, and then wherever you might be later as your business grows and changes. So we do help with the licenses and registrations, again, the tax research, anything cross-border duties and calculations, and then some of those ancillary pieces like the 1099s, W-9s, and property tax. A key piece for Avalara is going to be those integrations. So our goal is always to integrate with the technology that you are currently using so that you can maximize the investment you have already made in those technology components, right? So we're integrating across all channels. So ERP, like Business Central, CRM, your e-commerce platforms. If you're utilizing a marketplace like Amazon, point of sale, you name it, we're integrating there. Even if we don't have a pre-built integration, we have an open API and that connection can be built. So our goal is really to integrate with the technology that you're using and stay as out of the way as possible so that we're not having to change your day-to-day, but we're really giving you that peace of mind. So when it comes to professional managed services, we do also support the implementation and training for all of the components that we have here. And we can also support, again, that risk assessment to make sure that you're determining where you need to be registered. Some of these services do have managed services attached, and you can fully outsource those components to us. So things like the exemption certificates, not only can we provide tools, but we can also provide the people support to actually validate those documents and communicate with your customers to get the right things ahead of that sale. I mentioned the integrations. Avalara does have over 1,200 integrations. I think it's actually over 1,400 now. I wanted to kind of hone in on the Microsoft Dynamics integrations. So we've been in business 20 years and we've been in business 20 of those years, same 20 with Microsoft. Again, we originated with that Microsoft partnership and have grown from there. We have over 1,700 Dynamics customers. I actually think it's over 2,000 now. Don't quote me on that, but so it's more than any of our competitors by far. We're really trying to integrate as seamlessly as possible to drive those efficiencies, keep you compliant, and again, make sure that it's a scalable solution for you. When it comes to Business Central, it's really important to know that a lot of what I just talked about is fully integrated into that Business Central connector. So when we add on that Business Central connector, we're connecting in there, not only for Avatax for that tax calculation and determination, both on the sales tax side, but also on the accounts payable side. You have the option to have both of those turned on. That cross-border component that I mentioned is available within that Business Central connector. So not only can it calculate the sales tax, but duties and tariffs as well. So you can give a full landed cost to your customers. Make sure nothing's slowing down or getting stuck in customs. VAT calculation is there. So remember, I talked a lot about how difficult compliance is in the US, but it's challenging globally as well. So if you're a business that is selling globally, that same tax engine, Avatax, can not only handle US sales and use tax calculation, but it can handle that calculation as well. So GST, HST, PST, if you're selling in Canada, all of that calculation can be done by the same tax engine. Exemption certificates are fully built in on the Business Central connector. So you will be able to request exemption certificates right from Business Central. You'll be able to view those exemption certificates right from the system from Business Central without ever having to leave that. So there's extra tools on the Avalara side, but again, we try to give you what you need up front in Business Central without having to leave it for your day-to-day processes. And then, of course, all of that's going to flow over to the return side to make things so much easier for you. So how does it all work? How does the data actually flow? Really, we're connecting these three main pieces. So your customers, your systems, and the government. They essentially hold all the keys to the kingdom, right? And that's who you need to pay. So on the exemption side, really, we're looking to give you tools that can help you request those exemption certificates, turn paper to digital, give you a place to store all of that information within the system, a way to validate that. And again, we have those managed services that can be added on as well to help with a validation, to help communicate with those customers. We're connecting our AvaTax tax engine for tax determination to your platforms, whatever they may be. Those platforms are going to send that transactional data over. So Business Central will send us all of the data that we need in order to make a determination calculation. And we're going to be looking at also the exemption module for that customer information as well to verify, is there a valid exemption certificate on file for this particular sale? We're going to be paying attention to everything that's going on with the government. So we'll be up on all of the research of tax rates, boundaries, rules, taxability, etc. All of that's stored on our side. You do not have to be the expert on that. Essentially, it sets aside the core logic of Business Central. And instead of looking at tax tables, which you typically would have to maintain and know everything about, you do not have to do that. It sets it aside, and it's actually going to be calling us, sending us all of the information. We maintain all of the rules on our side. We do the tax determination and calculation if needed, and then we send that correct tax rate back to whatever system sent it to us. So hypothetically, Business Central sent us the information, and we're going to send back the correct tax rate, whether it's 0 or there actually is a tax rate. All of that information is going to be stored for returns filing. Again, we stay on top of the schedule. We stay on top of all of the forms, and we actually handle all of the remittance as well as all of the tax notices. So this is kind of what it looks like on the back end. So, if you're in BC and you're doing an invoice, if you're on an e-commerce site and your customer adds things into their cart and then they add their address in there, the very first thing we're going to do is validate the address. So it's very important that we do that. If you go back to what I said earlier about rooftop accurate, you really need the full address. We validate that address to ensure it's correct. So 1, you're shipping to the right place, but 2, we are making sure that we're rooftop accurate on that rate. We're actually transposing it to longitude, latitude on the back end, so we can be as precise as possible. We're looking to see, is that client, or I'm sorry, are you registered in that state? If you are registered in that state, then we move to the next step. But if not, then automatically a 0 goes back because you have no obligation to collect any kind of tax. If you are registered, we're then looking to see, is the client exempt for this particular sale? If not, then we are going through and applying all of the sourcing rules. We're looking at the applicable jurisdictions, and we're looking at every single line item on that invoice and identifying the taxability and then thus the correct rate of each of those line items. If there are multiple jurisdictions, if there are, multiple special jurisdictions, we're adding all of that up and we're sending it back to Business Central, the total for you. Again, it's being stored for remittance, and now you can sleep easy at night. This all happens in like less than a nanosecond. So in the blink of an eye, less than that, really. It happens that fast. This just gives you a quick peek at that tax decision tree on the Avalara side. Again, are you collecting tax? Is your customer taxable? Is the product or service taxable? And then you'll see that breakdown. And again, it's all based on that ship from, ship to, or in the case of a service where that service is taking place. It's important to note that it is one tax engine. So you can integrate multiple business systems to the same tax engine, right? You can have an ERP, a POS, you can have an e-commerce site, etc., all going to the same tax engine. It's really important because it does establish a single source of truth for all of your compliance data. That way you don't have to, recalculate, duplicate any of that information. All of the tax liabilities are coming from the same place, right? Consistency on your reconciliation. It does also allow us to track your nexus for you. So I go back to what I talked about earlier with that economic nexus. How do you track all of that? We can track it automatically for you because all the transactions will be coming through that tax engine. We'll know which ones are taxable, which ones are not taxable, what state they're taking place in, et cetera. And we'll be able to track Nexus for you. So any state that you don't have turned on or that you're registered in, we'll be looking at those transactions flowing through to see if you're approaching Nexus, it'll turn yellow. And if you've reached Nexus, it'll turn orange. And then you have the ability from there to either register yourself or to go ahead and choose to have us register for you. We also are a Streamline Sales Tax certified service provider. So if you are not familiar with Streamline Sales Tax, I bring it up because it can definitely be a money saver for you. So you're probably sitting there thinking, this looks great. Oh my gosh, this would make my life so much easier, but how much does it cost? I bring up Streamline Sales Tax because a lot of states got together, it's 24, I believe, to form the Streamline Sales Tax Organization. And their goal essentially was to make it easier for businesses to be compliant so they would get their revenue, right? They're, again, highly dependent on that sales tax revenue. So they have certified several service providers, and Avalara is one of them. If you choose to register for the Streamline Sales Tax program and you are using a certified service provider for the entire process, so the determination and calculation, exemption certificates, and returns filing, then the Streamline Sales Tax Organization knows that it's being done correctly and that they're going to get their money on time. Thus, they will actually pay Avalara to handle that for you. So in the states where you might qualify for Streamline Sales Tax, we would actually bill the Streamline Sales Tax Organization for those states. And we would bill you for any states where you do not qualify or it is not offered. There are a few criteria in order to qualify, but essentially you really need to be a remote seller, no fixed place of business, payroll exceeding a certain amount in that particular state. So if you're selling into a state and you have no physical presence there, you may actually qualify for Streamline Sales Tax and thus, could get a huge savings on any kind of sales tax automation bill. All right, so when should you pursue automation? Now that you know what it is and why it's so important, when should you think about this? You really want to try to automate before you run into any kind of problem. That's my best advice. Don't wait too long. But especially you want to start thinking about it ahead of any kind of financial events. So, mergers and acquisitions, if you're going public, those types of things. Any kind of growth that might be happening. So if you're launching new products, or maybe you're going to start selling on a new channel, right? Maybe you've sold exempt in the past and now you're going to launch an e-commerce site. That's going to be really important to take a look at your Nexus. Make sure you have that accurate so that, you're in a good place once you launch that site or change how you're doing business. Any kind of leadership or technology shifts, that's another great time. If you're updating your technology in any way, it's a good time to really look at what might plug into that to really, again, enhance that technology. So when you think about Business Central, Avalara plugs beautifully into Business Central and can, again, just take that to the next level, enhance that investment that you've made. And you definitely want to probably look at it if you've had a negative sales tax audit, because clearly then there's an issue and it's something that you'll want to take care of and so that you don't have that issue again. So why pursue it now? I kind of highlighted a couple of words on this, but really, who wants to worry about sales tax? Things are changing so rapidly. It's very challenging to keep up with, and that's not going away. It's only becoming more challenging. You definitely, want to avoid any kind of audit or put yourself in a good position when you are audited. So you don't want to wait until after you've had a negative audit and now you're dealing with that, as well as, the fallout from it. And then reducing any risk. The goal, again, is to put your business in a situation that you can be profitable and productive, and that you don't have, skeletons in your closet that are kind of hanging out there that you're not even aware of. So a couple places to start. I would say if anything that I said seems overwhelming to you, take it one day at a time, right? The very first place to start is think about those 5 steps, and it's ensuring that you are registered in the states or jurisdictions that you need to be registered in. So first and foremost, reassess those tax obligations, because for many businesses, that's really eye-opening once they start to reassess that and they realize rules have changed and they are not registered anywhere near where they should be. So think about that physical presence, the economic nexus. Again, a lot of things have changed. So a nexus study is, the way to go. And I will say there's a little there at the bottom. There's a few different ways that we can help you with assessing that. I love to have this conversation to gather some data from you and do a high level analysis, but we also have risk assessments that we do, formal risk assessments where our tax team will give you a formal report back. We've got our standard, and then we have a more in-depth one depending on what your needs may be. The standard one is typically $4,500. It's a one-time professional services fee, and I am offering that to you today at no cost. So step number 1, reassess your tax obligations. I can help you do that at no cost so that you know where you sit and you know what states you should be registered in, or you confirm that the states you're registered in are correct. Once you have reassessed those obligations, if there are any states where you're not registered, then the next step would be getting registered in those states. Does it make sense to get registered in those states? That's always a business decision. And then the third thing would be to really look at that automation piece. Most people will be assessing their tax obligation while they're also assessing the sales tax automation, because before you pull the trigger on a whole bunch of new stuff, you want to make sure you have that automation in place so that you're not having to file in 30 states and you've got no automation. So we really try to look at both, but I would start with assessing your tax obligations, and then if it makes sense, getting registered, and then looking at that automation piece. I specialize in helping with all of those different aspects. Again, my background is teaching, so it's always my goal to learn more about your organization, understand your goals and priorities, lay all the cards on the table, present as much as I can from an education standpoint, and then work with you, your business best to get you what you need. So I'll leave you with that. The last poll question, Amy, if you can put that up, is how likely are you to consider implementing Avalara solutions after attending this workshop?
Yes, I would say automate if you can.
Sleep
Take this
easier
burden
at
off
night.
of your shoulders. No one wants to deal with sales tax, that's for sure.
Feel free to reach out to me if you do have any questions. I put my cell phone on there as well as my email. I am definitely happy to, just have that conversation, elaborate or go deeper on anything that I've shared with you today. Amy's going to make the slides available to you as well. The Avalara website is also a great resource. So those maps that I showed you, they're available on the Avalara website as well as some additional information. But again, feel free to reach out to me. Happy to have the conversation with you and get you anything specific that you might need that would help you in just, better understanding this or starting to consider automation as a next step.
Yes.